Good afternoon, folks. Ryan Gonzalez here with Becker Properties. I'm joined with Mr. Aaron Lee,
Hey,
First
what's up,
Class
guys?
Credit Consultants, and Carlos Cruz.
How you doing, Ryan? Good morning, Aaron.
Good morning. How are you?
So we're here today to talk to Aaron about his credit repair company, credit consultant company. He helps educate people on credit repair and how to do it themselves, but also helps them along the process as well. So, Aaron, I want to jump right into it. How did you get started with this? Because I've always known you as a real estate guy, real estate investor,
Yeah.
and in the real estate world. And I know
Right.
you have a couple other businesses.
Sure.
But tell us how you got involved in credit repair.
Yeah, so definitely lately I had kind of put it on the back seat, on the back burner, just because I had a lot of other businesses and stuff going on. So, but now, I'm kind of hitting it full strength. I feel like right now is one of the optimal times to be able to do it because of a lot of things that are going on with some of the credit bureaus and the reporting and stuff like that. So I was a real estate agent for 14 years. 6 years in, I kind of got tired of having low credit. We were doing back in the day when it was like 580 credit approvals. We were getting everybody approved, man. So that was always a good thing, but then it was always like, well, they needed down payment assistance or they needed some type of other stuff to get their score up. So
More difficult files to
yeah,
work with,
yeah.
right?
So we were sending them out and to credit repair companies here locally in San Antonio, and things just weren't taking off like we wanted them to. I feel like a lot of the ball was being dropped, and a lot of the clients, a lot of things were happening. A lot of the credit repair companies get so big that things kind of start falling through the cracks, right? So I was like, man, I'm going to kind of look into this. So I started looking into it. But prior to that, I want to say maybe 2 years, I had repaired my own credit. Right, I took myself from a 400 to a 670. So I did that all by myself, writing letters and just kind of researching. So I was like, well, if I can do it for myself, I can do it for somebody else. I can definitely do it for my clients, and then it gets a double fold effect
Yep.
because then I get them, into their mortgage on the real estate side as well.
And no one
So-
cares like you, when it
Yeah,
comes to your
yeah.
clients and
Oh,
getting
yeah.
them,
Oh, yeah.
up to speed and stuff like that.
Yeah, for sure. Credit companies say they'll keep you in the loop as an agent, because they want more business, but that kind of rarely happens especially with the bigger companies.
And they're dealing with hundreds of people, so
Yeah,
like you said,
absolutely.
stuff falls through the cracks.
Yeah, absolutely. So I just started doing it and it took off. I got 1 or 2 clients and got them into a home, and then I said, you know what, this is great. Let's go ahead and start this as a secondary business to kind of complement the real estate business. So that's how that started.
That's awesome.
Yeah.
So this was, you said 7-8 years ago?
This was about 8 years ago now.
8 years
Yeah.
ago, okay. So what's the first steps to doing the whole credit repair? Like you said, you did it yourself. What steps do you have to take?
Sure. So first and foremost would be to actually look at the report and see what's going on it. Take a look at everything that's kind of the derogatory or negative items that are on the actual report, go through them, and then kind of figure out what items on there are items that would be more sufficient to get off. Because a lot of people think, well, 7 years, we're going to get this off or that off. Most of the times, there's a lot of things that are on there that don't even need to be taken off in order for the scores to go up. So
And this is what I hear from lenders quite often too, because they have access to your credit report when they pull it, and
Sure.
then something called a credit analyzer where they can kind of play around with the numbers and play around with debts and see what needs to be paid off and what doesn't.
right.
Instead of just paying off everything or paying down everything, they should really go to either the lender or the credit repair person first to kind of see what they need to do, right?
Right. The credit simulations are great, especially on the mortgage side, because they're able to mortgage lenders don't have time to really analyze and figure out what is going to be the most specific to be able to take off. Us as a credit consulting agency, we know how to do that. So, either way, either one works, So.
I want to interject something, and I think that's a really good point. A mortgage lender, when it comes to looking at those systems for credit analysis,
Sure.
they're only going to be as good as that lender is experienced with credit.
Right.
I was telling you a minute ago, I had 20 years managing collection agencies, so I have a little more experience than others with credit reports.
100%.
And so we've had situations where the simulator might say, hey, pay this off, maybe consolidate here. But there's other little tricks. Mm-hmm. I had one lady, it was saying to do these things, but it didn't make sense because the amount of money she was going to have to spend to do it. What we ended up having her do was she moved some of her debt to her husband and then consolidated all of that credit card debt onto one credit card,
Right. Gotcha.
which freed up the others. And all of a sudden, instead of spending like $9,000, she only had to spend like $3,000, and her score went up like 30 points.
Yeah.
So there's little things that you can do.
Oh, yeah.
We were talking about last week with the opt-out pre-screen.
Yeah.
Yeah.
And well, an average lender might not know to do that, what you did with the credit cards, right?
Right.
That's Yeah, I mean, it helps a ton to have someone like Carlos in your corner, honestly.
Oh yeah.
Well, that's what I was going to ask you. When does it make sense for me to hand the easy fix versus if I look at a buyer, right? There's buyers that can buy now. That's easy. There's buyers that maybe they need some repair, easy stuff, maybe 60 days to 120 days. Then there's the people that are work.
Yeah.
6 months, maybe even a year.
Right.
I can tell the difference. I mean, for example, if you've got 3 mortgage lates in the last 12 months,
Oh, yeah.
you're not buying right now.
Oh yeah.
But when does it make sense for me to hand them to you versus not hand them to you?
I mean, realistically, I would say at any point when they need the help.
Really?
I mean, I would think so, yeah, because there's just so many different little things that we do on our side to be able to, and like, you know, we talked about you guys to be able to calculate everything out, and that's all fine and great, but there's also a lot of other things on our side that we'll be able to do to kind of push it along a little further, you know what I'm
Okay.
saying?
Can you elaborate on that a little bit?
So, you know, the thing is that, like, you talked about lates, right? So the one thing is that a lot of people, when they look at their credit report, they say, well, I really don't have a lot on there. I get that a lot all the time, right? And you're like, okay, well, what do you mean you don't have a lot on there? Well, I just have like a couple of credit cards and I have like maybe one collection. But what they don't understand is that those lates, those 30, 60,
They're
90
killing
day
you.
lates, they kill you. They're going to hit you 50 to 60 points.
That's 40% of your scoring model.
So on the and I've been able to do it on the Morgan side, where I've been able to get them reversed. But that's one of the big things that I pride myself in being able to do is get those reversed.
Okay.
So once we get those reversed, they're completely swiped off. Now you don't have 30, 60, 90 day lates.
Oh, that's huge.
Granted, right? We're not talking like you got 5, 6, 7 of them. If you've got 3 or 4 of them, I can usually get them either down to 2 or 1 or get them all wiped off.
So I've got another borrower with a builder. The guy makes just a ton of money, but he travels all over the world. He's gone probably 9 months out of the year traveling. He's like, I'm home for 2 or 3 days at a time sometimes, and then I'm back to Europe or I'm back to Japan. And he was really stressed because he had a mortgage and it wasn't set up on auto. And when he missed one, he missed another. And now he's got those 2 mortgage lates. He had a HELOC, and those had a ton of mortgage lates.
Sure.
Yeah, I think what we're going to do is we're doing the loan as a DSCR investment with his sister.
Sure.
So we solved that problem today. But the man needs to get his own financing. So I think I want to send him to you immediately afterwards.
Yeah, for sure. We ultimately do a goodwill letter. You know, we just basically write a letter to the mortgage company and tell them, hey, look, this is what happened. And just exactly how you kind of explained it. You know, we'll go through. Obviously, there's some other stuff we're going to do. We're going to give away all of our secrets.
Right. Well, there's a cost,
But,
right.
Yeah. But yeah, I mean, it definitely works. I mean, I've done it before. And so, yeah. And that's always good stuff because that will do it faster than getting off most collections or most charge-offs, you know. And like I said before, most individuals think, oh, well, I don't really have anything on there. But in reality, it's like the things that you do have are quantifying and hitting it hard.
They don't.
You know what I mean?
They don't understand. I mean, very few people understand how to just even look and read
Right.
a credit report, let alone diagnose what's actually causing and driving those scores to go up or down.
Yeah,
that goodwill letter is pretty interesting. I never even thought. I mean, I don't think much people think that would do much good. Just explaining your situation, but apparently it works, right?
Yeah, I mean, it works. Yeah.
So you see all kinds of different people with credit repair help or need credit repair. Do you see any common themes with people that come to you that need credit repair? Are there certain like common factors that you see when you're looking at these files? Like, what's the most common thing I guess you see when people need credit repair, or why do they need credit repair? Is it missing?
Honestly, it's the lates.
The lates?
It's
Okay.
the lates.
Lates kill you. Lates are lates are probably worse than letting something go to charge off.
Yeah, or collection. It'll definitely hit more, you know.
See, that's
And the higher your
that's
score,
crazy.
like if I had a 760 and I had one late, I will lose more points than somebody that maybe has a 640 and gets one late.
Right.
oh shit.
Yeah, those late payments kill you. You know, the most important thing I tell, and especially while we're
So
working
the higher your
through
score
it,
is, like
You better protect it. That's why we were talking earlier about. So I was saying earlier to guys that somebody went into my mailbox, stole my Home Depot credit card,
Oh, yeah.
and apparently it's they mail it to you and it's active.
Right.
And he goes out and charges $2,600. I was in panic yesterday. I was on the phone for probably 3 hours because I wanted to make sure that my credit wasn't going to get ruined because I value my score. I've worked really hard to keep my score where it's at. that scares the Jesus out of me.
That makes a lot of sense, man. Makes a
Yeah.
lot of sense. In these past couple of years, I had collected a lot of debt on my credit cards, and I saw my score drop, and I'm like, dude, I'm good. Like, I'm not missing anything. I'm not late on anything.
So what's going on?
But it's just the fact that it's been so good, and now you have a lot of debt. So
Right.
now they're taking
usage.
It's just like debt to income when you're doing mortgage, your credit to debt, right? So you're going to have a lot of debt for amount of credit that you have. If it's high, you want to keep it optimal, like 20%. You know what I mean? So
Yeah, we've talked about that.
yeah.
Yeah, I've always heard it's like 30%, but 20%, yeah, somewhere
Yeah.
in that ballpark,
Yeah, in
right?
that ballpark,
Never want
yeah.
to be over like a 50% mark
Right,
on your
right.
revolving credit.
Here's what's crazy about credit. I've had buyers that said, "Hey, I've got terrible credit. I can't qualify." And we'll say, "Look, just apply. Let's just let me look."
Right.
And I had one buyer, he hadn't used credit cards in 20 years. He was a complete blank. I'm like, "Sir, you didn't have bad credit. You just had no credit.
Right.
You have nothing to be measured on. Credit is simply behavior."
Which is better than.
But then here's the
better than- yeah.
irony. I had a young lady. She had been here for a few years. She had no credit, and I sent her to go to get a credit card, one of the secured credit cards, $500. And the next month, her credit score was 720. How is that really measuring behavior? It's not, and I hate to use the word fair,
Yeah.
but it's really not fair.
Yeah.
And it's an ugly manipulation of the system.
Yeah.
And that's why using somebody like you to help them navigate fixing, because if you spent 2 or 3 years damaging your credit, getting it fixed overnight is not easy unless you have a ton of money. Money will fix it.
It might.
Well, like we were talking last week about the pay for deletes.
Yeah.
That's huge.
But the biggest thing on that is that most of the times, I'll be completely honest with you, because when I first started out, I was having some clients do stuff like that. The credit companies don't really care. Like, let's be honest, right? They want their money. And so it's like, okay, well, what do? You call the procedure is call them and say, hey, I want to do a pay for delete, right? When realistically, you're supposed to be sending certified letters to them to do it, because most of the times what happens is they won't take it off. You'll pay the money, but it'll still be on your credit.
So what
It's
we
on your
do
account.
on the mortgage side is we make them give them an offer letter of pay for delete up front.
Got you. Okay.
Don't ever give your money away.
Yeah.
Get that letter up front.
Yeah. For sure.
Then pay it.
Got you.
Then you get another.
And
letter.
now you have it, and then you've got a second letter that backs up that you met your payment term.
I love that.
And then we upload that directly to the credit bureaus.
Okay.
And then usually a supplement update takes maybe 3 days.
Yeah.
And man, you've seen some
Come on,
scores
fast.
come up
Yeah.
quickly.
I like that.
But it's a relationship. I've got to do a lot of work
Sure.
to get that done. And by the way, each update is $100 and some odd. It's very expensive for the lender to do those things.
Yeah.
What are some common misconceptions with credit repair? There's a bad stigma behind credit repair that maybe they take your money and they don't do a whole lot, or it takes forever. Like, give us your point of view on that.
I think on the side of the collections, the charge-offs, the getting the lates removed, I think most people, and there's a lot of credit companies out there that are like, well, I can get you a 100-point increase, within 2 months or 3 months. But the thing is that per law, per the FCRA, right, you have 30 days allotted for each credit bureau to come back and give you proof, or what's called verified proof, right, of this debt or whatever it is that's on your credit report. And a lot of that they have 30 days. They're going to take up the full 30 days. You know what I mean? So it's not going to be something that happens within 2 or 3 months, So I think that's the biggest misconception is they're like, well, I got this other company that could do it within 2 or 3 months. And I'm like,
Realistically, it takes,
realistically
6 months
about
to a
6
year,
months, yeah.
right?
Well,
Sometimes
it goes back to that statement. Let's say it took you 6 months to miss your payments, another 2 or 3 months to get charged off.
Yeah.
That's a year. Let's just call it a year. So in 1 year, there was a lot of damage to your credit.
Right.
Getting it fixed in a week or 2 weeks or a month isn't realistic.
Right.
It's rare that it can happen.
Yeah.
It really is.
So it was probably something shady, but I heard about this dude that paid this one credit repair person supposedly a lot of money, and they did some magic in 3 months and got them up like crazy. I don't know, like, if you heard any.
I couldn't even imagine what.
I can share a story.
Yeah.
I won't name names.
Let's hear.
So I worked for a mortgage company, and we were contacted by HUD to send them information on a number of loans that were submitted. And what we had noticed were these were all FHA low score loans. The perception was that these loans were doing some sort of unethical or illegal credit repair. Well, the message from the underwriting department was beware, because supposedly this person was writing false letters and getting trade lines deleted off the credit report. So when that loan officer would pull credit, it would look fantastic.
Yeah.
And then when the credit repair companies the next month said, wait a minute, we didn't authorize that deletion. And then it gets reported again. We didn't send that letter.
Gotcha.
And yeah, there was a number of loans that were under investigation.
Wow.
I don't know the outcome. I'm not with the company any longer,
Yeah.
but it was enough to scare me to be very cautious on what person I could send to a company that we can trust.
Yeah.
You ever do something like that?
No, that's the first time. Yeah.
Yeah, HUD investigated
That's
it.
crazy, right?
Yeah, that's crazy. I mean, other than that, the only other thing I could probably think of is like throwing somebody on a bunch of already pre-authorized trade lines. You know what I'm
That's
saying?
something pretty cool.
But,
That's a cool
yeah.
trick right there.
But even at that, I mean,
Can you
we're
explain
still-
how that
we're
works?
talking-
Just so the audience kind of knows.
So let's say you have a credit card, great credit, absolutely 100%, and you add me as an authorized user on it. So now it shows if like that credit card is actually mine as well, and I have good credit, good history, good revolving history on it as well. So
I've heard this being done from lenders.
And I want to talk about that statement because it becomes a solution that also creates a problem. In mortgage, if I see an authorized user trade line, when I run that automated underwriting finding, it might say that trade line needs to be removed or corrected because it's seeing it as my debt, not necessarily just your debt.
I got it. Okay.
So we got to be very cautious.
Yeah.
I mean, it has been a wonderful solution. We had one family that before they came to me, the wife put all her debt in the husband's name. He filed bankruptcy.
Oh, shit.
It was extremely unethical back in those days, but
Wow.
the bankruptcy laws were very simple back then.
Right.
He files bankruptcy. She buys a home.
That's wild.
There's a lot of unethical stuff that can happen. So again, working with somebody that you can trust matters a lot.
Yeah.
And just to touch on that, we can get rid of bankruptcies. I've done it before.
I've heard about that. I understand that there's a process, and it's a detailed process.
It's a detailed process, yeah. It's very detailed.
Would you say that it's easier for an 11, a 13, or a 7, or is it the same amount of time across the board?
The 11 and the 13s are the ones that can usually. Me personally, I haven't gotten rid of a 7, but I'm sure it's the same thing. I mean, I've done 11 and 13s though. So.
But on the mortgage side, when we run certain reports, fraud guard and some other things, that bankruptcy will surface even though it's not on the credit report.
Right.
So we're going to see
Yeah,
it.
you'll still see it. Yeah.
Mortgage is different. Like if you were buying a car, that's a home run.
Right.
You want a mortgage, that's going to show up.
Yeah, and then when you're going with using government loans or whatnot,
That's
you
even
just,
more cautious.
You
yeah.
can't
Yeah,
you can't
yeah.
buy within 3 years or
So it just like if you're just looking for a credit card, if you're looking for a car loan, they don't care.
yeah.
That's going to be a slam dunk. On a mortgage side, because we're investigating so much more. I mean, we had a buyer that said he didn't own any properties because he was trying to get out of that tax hit and that insurance hit and that mortgage hit because they weren't on his credit report. And when he applied, he said he didn't own any other real estate. Well, we ran a report. He owned like 5 homes. It was like thousands of dollars in tax and that we had to hit him for and account for it in his mortgage payment. And yeah, he didn't qualify.
There's an old saying, right? A mortgage, buyers are liars.
It's
Ain't that the truth?
I prefer inspect and verify
Yeah.
because then nobody feels that they've been slighted. But it's an interesting world when it comes to credit.
I used to do real estate, man. You know all about that.
Oh yeah,
man.
dude. Oh yeah, yeah.
The buyers would tell you something, man, especially the lenders. I'm like, dude, you got to be completely honest with these guys. They're going to find out. Like,
You get 2 days to the closing table and find out they went and charged a bunch of crap. They
Oh, my
repull
God.
credit. Like
I had a couple get married right before closing. That was crazy. That messed up everything. Yeah, they couldn't buy anymore.
What about the one that you and I, probably the very first loan that we did?
Oh,
It was a
yeah.
builder.
That was crazy.
We had a builder loan.
can't believe that
Qualified the
closed.
buyer. We had a qualified buyer, perfect banking statements, really good credit score, strong, stable income, had been on the job for a long time. Slam dunk.
Yeah.
Goes under contract. I think the house was like 4 months later, supposed to be ready in August. Well, enough time had passed in the bill that we had to reorder a new credit report because it only lasts for 120 days. So we order a new credit report. We're thinking, hey, no big deal. Oops. He has about 14 payday loans. When we get his bank statements, he's got NSFs, overdrafts.
It was like insane, right?
It was. It didn't. I didn't understand.
It didn't make sense.
Nothing made sense. We get him on the phone, and he said, "Yeah, I had some problems with my job, and I had some problems with the wife, and blah blah blah."
I was thinking this transaction's dead.
Yeah, I
This
thought it
deal's
was-
dead.
Yeah.
Yeah.
So what we can do in lending, especially with the bank statements, is we have the option based on the guidelines, the findings. We have an option to run what's called a verification of income, verification of assets, verification. And so instead of doing a bank statement, we just got the verification of assets from the bank, which is an average income in the bank per the year.
Got you. Okay.
And so they don't have to see
That's awesome.
all of the
Right.
negatives.
Yeah.
So that was one solution,
That's
but the
great.
credit was the other problem. And I think we ended up getting like 60-day extension on there to 45 days.
We got an extension, yeah.
because he had to pay all this stuff off so we
Yeah.
could do a refresh.
Right. Right.
I mean, I'm not spending $300, $400 per trade line to update when you've got 20.
Yeah.
That was a crazy
Wow.
deal. Crazy
It
deal.
was a mess.
Yeah.
But we got it fixed.
intense.
We got it closed.
It's pretty amazing.
That's
though.
great though. Yeah. To get it
looking
closed.
back at that.
To get it closed,
Looking
man. That's
back
like,
at that, that's pretty
yo.
amazing.
Where
It's a
were,
little-
where were
it's-
you when I was doing my real estate stuff?
There's a little bit of skill involved.
So yeah, we all know buyers do crazy things. There's certain like little simple things they can also do to help improve their credit or help improve their situation. Can you give a couple examples of stuff that buyers can do themselves? I know when they get to a certain point, they have to go credit repair,
Yeah.
but up front or, looking at their debt or credit lines, just give me some examples if you don't mind.
First and foremost, I personally try to talk my clients out and really anybody out of actually getting a credit card, right? And the reason being is that there's so much that can go wrong with the credit card, right? You can miss a payment. You can go over your debt utilization, right, which is over the 20%. So there's a lot of companies out there right now, Self, Chime, that you can actually get a debit card, but it'll actually show on the credit report as a credit card with a certain amount of limit, and you not going over that certain amount of limit, if that makes sense.
Yeah.
So that's something that's
it creates
really
a
new.
positive credit line for you.
Within the last probably 6 years, 5 years, I'd say that's come up. So those things are great because you don't have to worry about missing payments, any of that other stuff. You're just using it as a debit card.
You can like report your rent too, right? To the credit bureau.
Yeah, you can do that.
somehow. Like
Yeah, you can
Rent
do that.
is a huge thing, assuming it's perfect.
Yeah.
Assuming
Yeah.
your rent history is perfect, that is a huge value add because in mortgage lending, especially with a first-time home buyer, that is one of the questions the system is asking the loan officer when we're filling out that application.
Oh, that's right, yeah.
Is do they have positive rental history for the last 12 months? And if it's already on the credit report,
Yeah.
it is amazing because then I don't have to wait for that landlord to give me some sort of updated supplement or letter.
Are there's some type of apps that help you like add credit lines?
Yeah, Self is one of them.
Self?
So you can do
Okay,
it with
so-
Self. You can
Is that
add
a pay service or is it free?
they have like an annual thing that you
Okay.
have to pay, but basically it's a debit card. You can add your rent on there. You can add your car payment. You can add all kinds of stuff. Your utility bill, your water, your electricity. You can add all that as
See,
positive.
that's awesome. So
as
and then
positive
that
reporting.
avoids you from having to get credit cards if you don't really need them.
Yeah, I mean, come on, let's 12% interest rate, right? Minimum on them, right?
That's not bad.
Yeah.
I mean, that's not even bad. I was gonna say like 20,
Like 24,
Sheesh.
12%, right? Just, I mean, so yeah, it's just better to.
You know which
to
ones
get
have the
some
crazy
service.
ones are the airline ones. Like
with mile
the
stuff?
Southwest
Uh-huh.
and the city for the American Airlines. Those have crazy rates,
Yeah.
man. I know because I have them. Yeah.
I haven't looked into those. Like I said, man, I won't get credit cards. I'm like, I stick strictly to the to those programs that kind of make it look like it is. But
Yeah. So avoid the
Yeah.
credit cards. And,
yeah, so
and-
avoid the credit cards, and then if you do have credit cards and they're open, do not close them. A lot of people think, hey, I want to close a credit card, I just don't want to deal with it anymore. That just depending on how long that trade line has been open for, the history on it as well. If you close that out, it'll hit your score dramatically.
I don't think people realize that.
So yeah,
Showing the history of the credit card, it's better just to cut it up and not use it.
yeah, cut it up and not. Well, the thing is that in some of the contracts they say, depending on who it is that you have it with, right? It's like, well, if you don't use it within 3 months, we're gonna just close it ourselves. So you got to pay attention to the fine print.
Could close
Yeah.
it,
Yeah, you
or
gotta
they
pay
could
attention to
reduce your credit limit, right?
Yeah.
which is a negative.
Yeah.
That's
So definitely want to pay attention to all that kind of, and like we were talking about earlier, getting there to your having good credit, right, is one thing, but dude, keeping it is a whole other ball game. You know what I'm saying?
It's work.
So it's definitely work.
There's probably a ton of clients you've worked with that you've got them there. Maybe they bought the house, but
Yeah.
then now they're needing your services again because one thing or another.
I have 2 right now, as a matter of fact. Yeah.
Yeah.
I've got a question for you. Let's say I am that person that, for whatever reason, I need a lot of lines of credit. Do you know of anybody that will help me manage and literally, hey, Carlos, you need to pay this bill today. Hey, Carlos, you need to pay this bill today, and do it as a service monthly or quarterly?
Kind of like a financial advisor, but
Kind of, but
with-
at a micro level.
yeah.
I don't off the top of my head, but that's a great idea.
Because
It's a new business right there.
I've got some
Business
My
clients.
wheels are turning.
I've got clients that they just, there's no reason.
Yeah.
I mean, when you're making $180,000, why did you have one late?
Right.
Well, because I was traveling.
Right.
I had one, this happened to me years ago.
Turn all that stuff on auto, man. Like,
Yeah, but if not everybody's paid consistently. I've
true.
got a gentleman that owns a business. Well, he runs his entire business off his credit cards. He might charge $500,000 on credit cards
because he
in a
needs
month.
to.
Yeah.
He's leveraging it.
I get
And
that.
so he's using that,
Yeah.
and now his score looks horrible. But then he's paying $500,000 off the next month.
But his income's great.
Yeah.
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 So there's a lot of messiness. I had one situation that happened to me. I made my mortgage payment, but when it was made, I didn't know that they had already sold my loan to another servicer. So it gets refunded to my bank account. I get this. Then it gets sold again a couple weeks later. So I get the new letter, but I think, oh God, I'm supposed to pay them. Well, I looked at the wrong one. I paid the ones that had just sold it again. And so now all that money's back in my account. I didn't notice. I didn't pay
Yeah.
attention.
Yeah.
Shame on me. And I get a late on my mortgage. Oh man.
Freaking out, right?
I ended up probably 6 hours on the phone with the mortgage companies and the servicing companies, and I ended up tracking down the CEO and sent a very direct message of complaint,
Yeah.
and they corrected it.
Yeah.
But again, how many people have 6 hours to spend in the middle of a day during
yeah.
the work week?
It's horrible.
Yeah. Those loans being sold, man, that's
That sucks, man.
that's something.
It just
that's
hurts the
for sure.
consumer. I want to go back to talking about the legitimacy of like other repair companies. What are some red flags that people need to watch out for? Because there's a lot of credit repair companies out there.
Yeah.
Like when I made a post about send me your best credit person, I got so many hits.
Right.
And so like I know a lot of people offer the service, but
Yeah.
what are some red flags to kind of look out for? How do you know if they're legit or not?
If
they're
they put
really
their phone number on a cardboard sign on the telephone pole,
yeah, if they're really
that's
doing
the guy I want to call, right?
Is there any questions to ask to know whether or not they're
Yeah, I think that's a really. How do I interview you?
Yeah.
Yeah, that's a great question. I think obviously primarily like if they tell you they're going to do it in 3 months or 2 months, that's like a red flag right there.
Okay.
Like, I probably wouldn't go with that. But realistically, man, I mean, I would ask how many graduates they have. You know what I mean? Especially in mortgage. One thing that I always would push is like, look, we have this percentage of graduates that go through
your success stories?
Mind you that like for me it was always a personal thing because a lot of them were my clients, you know, right? Just up until
Yeah, so you're gonna make it happen.
4 years ago. Yeah.
So you're emotionally invested,
Yeah,
too?
emotionally
Yeah.
invested in it. But one thing that I would always say is that if the company has, you ask them how many people they're working with, man. Because if they're sitting there telling you like, oh yeah, we got like 300-400 people that we're working with, that's the availability of them being able to like take really good care of your clients. I don't think that's going to happen.
That's too many
man.
What are your
right?
thoughts about those builders that they don't want to lose that customer and they have their own in-house credit service?
Oh yeah.
And but you
Doesn't-
got to pay them a fee.
Doesn't DR Horton have that?
I think
Yeah.
the few builders do.
Yeah, I've heard about that.
Have you run across any of that? What's your opinion?
You know, and they're using just regular credit companies because I know one of the companies that they actually use
Okay.
for those. So they're just outsourcing it to somebody. I mean, it's kind of like them using their own lenders too.
Right.
You know, it's one of those things. So
They might have.
they're
a
not
going
going
to
to be any better than anybody else, to be honest
Yeah.
with you. And it's all going to come down to the same thing. It's like how much time and attention is actually being put into this file to get it where it needs to be at.
So if I'm hearing what you're saying, one of the really good interview questions is what differentiates you from the guy that's handling 300 clients?
Right.
You know, what is your success rate?
What's your success rate for sure?
And, you know, is it reasonable that somebody could verify that? How would I know that somebody's really telling me the truth?
Yeah. I mean,
referrals, right?
Yeah, I think so.
Yeah, I think referrals.
referrals. You can't even go on the web and try to like look for, you know,
Oh, God, you type in
ratings
credit
and all
repair
kinds
and
of
you're going to get
stuff,
4
like,
pages of companies
yeah.
selling something.
So that, or like having people write reviews and stuff on there. I mean, how legitimate is that?
You can
really?
buy reviews
Yeah.
in foreign
So-
countries.
So do you have a
Yeah.
team that you work with? I'm assuming.
I do. Yeah. I have a
See, that's
few, so-
important.
Yeah.
So how big is your staff that you work with?
I have 3 right
Okay.
now that I work with. So
you have
including me. So
Do you
that's
have a
4.
volume of,
4.
hey, each one of you can handle up to 100 people or up to 25 people? How do you manage that?
So I actually will start turning people away after 100.
Okay.
So after I get 100, even if you were to come to me and say, hey, Aaron, look, I want to get this guy, and I'd be like, look, I'm already kind of maxed out right now. If somebody drops out for whatever reason, we can bring them in.
Gotcha.
Because I just don't want to get too big.
Got
and
it.
even if I bring on more people, that's not going to do any justice.
really
to me.
responsible.
It's not
I
going to do
agree.
justice to me at all. You know what I'm saying? So I would rather, I'm comfortable and good at 100, and then once we
I
graduate.
think I'm going to have some people to send you. Are you maxed out right now?
No.
Okay.
I have
Yeah.
some availability, yeah.
Yeah, that's definitely important, man. I like that. Yeah, that's really ethical.
Yeah.
And I don't. There's some people in this business overall that are not.
Yeah, I feel like, it's the whole quantity over quality type
Yeah.
thing.
Yeah,
you know?
yeah,
I'd
absolutely.
rather have quality than quantity, for sure.
Can you tell the audience about one of your success stories most recently had?
Oh, yeah, for sure.
Yeah? You
So,
got a couple?
yeah, and when you sent me over, I was taking a look at that, thinking about it. So one of my really, really good friends, he actually ended up becoming one of my really good friends after the whole credit repair process. But he came to me, had like a 420 credit score, right? And he needed to get into a home. I got him to a 670 within 6 months.
Oh, wow.
And we got him into his home. And
That's
he had
impressive.
gone, and he had, the main thing is this, dude, is that it was a personal thing because he had gotten his credit ruined because of a past relationship he was in.
Divorce?
He divorced. He
Yeah.
lost his house because of it. He lost all these things. So for me, it was personal. I was like, oh man, because I know. I mean, we know each other on a personal level, so you know kind of some of the stuff I had been through too. But I'm like, yo, I had to.
There's like more and more of that going on right now, man. Unfortunately, right?
Yeah.
I hear about all
Yeah.
these divorce, like people that I've helped 10 years ago, 8 years ago, or whatnot, are splitting up for some reason, and so this type of stuff is really happening.
Oh yeah.
And
Oh, yeah.
dude, it damages your credit bad, man.
I have an interesting story. It's an opposite spin of that. So years ago, a friend of mine was getting divorced. She knew her husband was cheating on her,
Yeah.
and she also knew that he had bad credit. And she made a deal in the divorce. Hey, pay off all my credit card debt, and you can have the house. So he was like, cool. So he pays off all her debt. And then the judge, she had her lawyer drop a little amendment that said, but it needs to be refinanced out of my name in 3 months. Well, she knew he wouldn't qualify.
Ooh, she got him good, man.
So he doesn't. She immediately goes back to court and got the house. So she got him to pay off the debt and got the house.
Sneaky,
What
dude.
lesson did we learn here?
Sneaky, sneaky.
Don't
Yeah,
cheat
that's
on
it.
your spouse. That's the lesson.
There's a couple of them I can think of right now, man. Oh my god.
We'll discuss those later.
Sheesh, that is a crazy story. Yeah.
That is
It was-
wow.
it was
Talk about a
brutal.
woman
She
scorn.
was
huh?
getting some type of advice, I bet.
She had a very good lawyer.
Yeah.
Wow.
Yeah.
Man.
Wow.
See, that's the type of stuff, man. Type of stuff. And then in the divorce, doesn't everything like go on typically the breadwinner, right? Whoever's bringing in the income.
Yeah.
Like all the debts, stuff
think
like
so.
that.
I
Like,
think so. I don't know. I've never
man.
been divorced.
I think
Not me.
well, recently I had one of my clients that the court made him cover all the debts until the divorce was finalized because he was the one bringing in the income and the wife wasn't working. So he had to handle all his current debts plus his new debts were like the moving costs and like the new rent or whatnot and new bills. Like, it was just crazy. It was crazy to me like how the court system makes you do that. But that's not the first time I've heard that. And that's where people
don't ever want to find out.
That's where people's
Yeah.
credit gets ruined because then they're like, I can't even afford this. I'm gonna miss some payments. You know, he almost let the house go, but we figured that out. But dude, that's some serious stuff. right there.
I've had divorces.
So I might
ruin a
be
lot of
sending
people's
him.
credit.
Yeah.
Yeah.
That's one of the main things, honestly, when we talk about having like the things in common that I get the most is it's like, well, I co-signed for a car for my boyfriend or my fiance. We were engaged, getting ready to get married, or I did this
Yeah.
or I did that for somebody else to help them out to get them into another place. And then what ends up happening is they split up, nothing gets paid, you know, it's like, so I deal with that a lot.
So with that situation, somebody co-signing for somebody, like as a lender, you can ask for like documentation that that person
So let's say
has been paying those and maybe get that debt released.
So
Or-
let's say I co-signed for my sister, and she's making payments, but that debt is legally my debt because I've agreed to the lender that if she doesn't pay it, I will. So it's my bill. Okay. Now in mortgage, what's cool is if the lender can prove that my sister has made 12 payments on her own out of her own bank account, then I, the lender, can exclude that debt off of Carlos. You got to be very cautious because if I'm giving her money and she's depositing that exact amount and then makes the payment, that lender is gonna.
Yeah, 'cause
when
you
it
can-
goes to underwriting, they're gonna see it.
You're gonna need
Where'd
bank,
you get this money?
the bank
Yeah.
statements or
Yeah.
like invoices, receipts, something
So
like that.
there are some other things that we can do to not have to show that. We just show her bank account, and then we get a statement from the lender that all payments have been made on time.
Yeah.
So there's ways to work around it,
Yeah.
but it's a process. It's time consuming.
Yeah.
So I got another question for you, and I thought this one was pretty cool. Like, what type of technology is coming out these days that's helped you with credit repair? Like, is there something new versus when you first started
Sure.
that's helping people and helping you?
Yeah, AI, of course,
Yeah.
100%, man. So one of the things with the letters that we kind of run into a snag on is when we send letters to the credit bureaus, they actually have a system that'll watch everything. And if there's super similar on the letters, they'll flag it out. So with AI will regenerate all kinds of different letters and make them so that they're not comparable or, you know, have any
They're each
comparisons.
unique.
Yeah, they're each unique, and then send them out to the credit bureaus.
Ah, okay. They have
So
it.
it's like you absolutely.
Yeah,
When I
they're-
first started, man,
they're
I didn't
scanning.
have a system. I didn't have nothing. What I was doing was I'd pull the credit report and I'd manually type every single letter for every single client.
How long
was
did
mine.
that take?
Had to end up hiring an assistant to come in and that was her job
Just
all
to
day.
type.
Was to type letters all day, dude.
Oh, and you were saying earlier that you hired somebody from Philippines,
yeah.
yeah, to help you out with
Yeah.
this specific business or something else.
Yeah, with this one. So originally, I had her. She was my real estate assistant. She was my transaction coordinator.
That's
real
right.
estate
That's right. I
assistant.
remember you telling me that.
And then I just was like, "Hey, you want more work? You want more money?" She's like, "Yeah." So I threw another business on her, and then threw another one.
And there's a ton of these services out there, right,
Yeah,
to do that.
and for
yeah.
them, it's great because they're making. And for us, it's like, well, we're paying them. They're up there. They're making a lot of money. You know what I mean? And it helps. It really helps.
Yeah,
So
that's cool. That's really, really cool. What else? I don't really have too much anything else.
I've
right?
got one.
Yeah.
When you see somebody that has graduated and has achieved the goal, how are you following up to make sure that they maintain that?
sure.
Is it quarterly? Is it annually? What are you doing to make sure that that relationship still stays positive?
Sure. So just like with anything with real estate, you know, sphere of influence, you know, your referrals, it's the same thing in any business, any sales, right? So we're going to definitely keep track with them on their birthdays, on anniversaries, on graduation anniversaries. Of course, obviously, when they close in their home, we're going to keep in contact with them on that. But yeah, we have a system set up, you know, our CRM, our drip, we'll keep in contact with them. I'll probably do 2 phone calls other than those kind of anniversaries a year, just to kind of see where they're at, see if there's anybody else that we can help out, kind of see if they have any questions. But like I was telling Ryan earlier, I don't call it's not first class credit repair, it's first class credit consultants, because we try to consult our clients all the way through the process. That way, once they're done, they have a better idea of how they got to where they were at when they came with us, how they got to where they're at while they're working with us, and then how they got to where they're at once
And
they're
how to
finished.
maintain it.
And how to maintain it, correct.
Because that's huge.
Yeah, yeah. So,
Well,
If I do all that work, I'm sorry, I didn't make a joke. If I do all that work, the last thing I want to do is screw it up.
right.
Sure.
But it does happen. It does happen.
Life.
Yeah.
So following up on that, any simple things that people can do to try to avoid bad credit or avoid bad hits or whatnot? Any like tips you would give?
Yeah. I mean, if you do have credit cards, right? No credit cards. First off, I would say get the debit cards that act like credit cards for one. Second, if you do have credit cards open, don't close them, and then make sure you keep your balances under 20%. Try to avoid constantly running your credit, right? Because those little inquiries, those dings will hit, and they add up, right? Especially car dealerships, man. They have a bad habit of
The hard pulls?
hitting it over and over and over again. Yeah.
Does it matter hard pool, soft pool?
They're kind of within the same
Kind of same
realm.
thing?
Yeah, I think there in the mortgage stuff there's a soft pull. Am I correct that
Correct.
it doesn't really?
So, the way it was explained to me was, if I pull credit, I am actively applying for something,
Sure.
and the bureaus will annotate that as an inquiry. We on the mortgage side, we can do what's called a soft pull, which doesn't show up as an inquiry. Now, when you go to the credit bureau and ask for your own report, like that freecreditreport.com,
Yeah.
every inquiry will show up.
Got you.
But what's interesting is we now have a soft pull prequal that we can upload to Fannie Mae's automated underwriting system and actually qualify a buyer with a soft pull credit.
Wow.
Which is really cool, because then we're able to work with that family to make sure that they're in that opt-out pre-screen, so they're not getting drilled by all these trolls on the internet that are buying their data.
Right.
Yeah. So one last question for you, Aaron, before you go. How do people get started with you? What's the first step? They just give you a call? And
Yeah, just give me a call. I'm very personable. I'd rather have them give me a call and talk to me on the phone, kind of explain their situation. That always works out better than going email or text. I'm old school like that. So definitely just giving me a call.
Yeah, and I see you promoting like some $99 thing for credit repair. Is there like one flat fee, or how does it work typically with
I feel like
the cost?
to begin with, if somebody's coming to you for help, right, with credit repair, they're obviously not going to be able to afford $1,000 down or $800 down or $400 down or whatever it is. So we keep it very simple. We do $99 a month, and it's not $99 down and $99 for your first month. It's just $99, and we just start to continue to work on things. And we keep it cheap because we want to keep people in our program. We want to see people graduate. That just makes us, it makes us stand out above all the other credit repair companies.
I got to piggyback on that, Ryan. I think it's really important for somebody to invest in that service, because it also means that if I'm investing in something, I'm legitimately and genuinely wanting to accomplish a goal,
Right.
and not just kick a tire.
Yeah.
And there needs to, and there's a cost for everything.
Some skin in the game at that point.
Exactly right.
Yeah.
I've found that because I've charged over that, and I've had bigger down payments you're going to have to come to the table with, and I've lost out more than I have rather I've just done $99. You know what
Affordable,
I'm saying?
manageable.
Yeah.
Yeah, seems pretty simple. And this is one of those sensitive subjects for most people, right? Like either they don't know anything about credit, or they know very little or enough to get them in trouble. They know how to open some credit cards, and then they just like screwed it up after that for one reason or another. So I understand the sensitivity of it, but I think it's really important just to reach out, because it doesn't cost a whole lot. And also, Aaron's here to educate you at the end of the day.
It's funny that you say that. I think in my world, there are so many myths about credit, of what somebody should do or shouldn't do. Well, my buddy said do this. My sister said do that. I went on the internet and it said I should do this. No, you need to speak to an expert. You need to speak to somebody that actually accomplishes the goals month in and month out.
Right.
Because what you heard might not be accurate today. And that's a big issue.
Oh yeah,
There's
I mean,
so
even
much
coming
involved.
from the credit debt world,
It's been 13 years since I
There's a
lived in
couple
that
things
world.
you probably learned
Yeah.
today that you didn't know, right?
Like I said, there's 13 years
Yeah.
since I lived in that world. So
It's-
the system changed.
A lot of stuff has changed, yeah, for sure. I think you two guys would be a good combo, man.
Well, I can help a lot of
Yeah,
families,
man.
and then using somebody that I can trust matters.
Yeah, definitely. Well, I mean, that's it we have for today,
Cool, man.
man.
Yeah, awesome.
Aaron, I appreciate you
guys.
coming,
No,
man.
I appreciate you guys.
I mean,
Thanks for having me
thank
on.
you.
I think
Yeah,
we all
for
learned
sure.
a lot, and I think
Yeah,
a lot of
it's been great,
the
for
people
sure.
watching this will definitely appreciate it. If you want to reach out to Aaron, get in contact with me. I'll connect you with Aaron. Carlos, thank you for your time.
Appreciate that.
Carlos, one of the best lenders out there. He's a broker now, so
Nice.
if you need to shop around for the best rate, this is your guy right here. Until then, we'll see you guys later. Thanks, guys.
Bye, guys.